Well, hello, everyone, and welcome to another Equity Trust virtual classroom session. My name is John Bowens, and joining me in the studio today is Equity Trust client and real estate investor, Tim. Really excited to have Tim on the show with us today. Tim's going to be talking about how he's been deploying private lending and real estate investment strategies with his self-directed IRA account. So, Tim, thank you so much for joining us here today in the studio. Welcome to the call.
Thanks for having me.
All right, awesome. So, Tim, I like to start off with all of our investors that come on the show with us. Can you tell us a little bit about what the catalyst was for you in self-directing your retirement accounts?
It started with several things coming together. One is I had an accumulation of funds in 401ks, and I didn't trust the stock market. I had friends getting into real estate. There's a local REI group, investor group, that I got involved in, and they got me interested in real estate. Honestly, first I went to another custodian, and after a while we found their fees to be too high. So we came over to Equity based on your better fees. The opportunity in real estate for a better return, and I thought safer than the stock market, were the reasons we moved up. We moved this way.
Perfect. And Tim, I'll say that for our audience today, that many investors that I speak with, my team here at Equity Trust has conversations with on a daily basis, had a very similar experience and came from a very similar background. So if you're out there and you're thinking, hey, I have this retirement plan, I have this IRA or 401k, and I'm not satisfied with the options available to me. When I say options, for most people, their retirement plans can only be invested in traditional assets like stocks, bonds, ETFs, mutual funds. In some instances, people don't have really many options other than a menu of mutual funds to select from. Whereas a self-directed IRA, particularly self-directed IRA with Equity Trust, makes available to you all of these other options, including real estate, notes, private equity, gold and silver, and a wide array of other alternative investments. Now, we could talk about on today's show a lot of different alternative investments, and we have lots of other educational opportunities to talk about a variety of asset classes. But today specifically, I've asked Tim to talk about the areas that he is focused on, which are primarily within the real estate category around private lending and holding individual properties. Now, Tim, I did want to touch on, you had mentioned a local REIN group. Can you elaborate for the audience a little bit more on what that group is, what they do, and how you came to learn about that particular group?
I live in Charlotte, North Carolina, and there's a group called Hobby Millionaires. And it's an unusual group because it's an entry point group. I call it just my name. I know the leader very well. We're investing partners. She invites anyone to come on in, take her lessons from her group, and she'll guide them into real estate. And she's guided us into real estate. We've done a flip. We found that to be too challenging. We've had rentals. We got rid of them. At this point, we only have investments through our IRAs. So we're totally out of IRA. Our whole real estate at this point is out of our IRAs. I'm retiring in 3 weeks. And at that point, I plan to dig in and invest more broadly, and not only with my money, but with other people's money as well. But going back to your question, the group is just one of many. There's many here in Charlotte. There's many in every town. Real estate investors getting together to share.
And Tim, you had mentioned an investment partner. Now, are these individuals, these investor partners of yours, are these people that you're investing in their companies, or are you making a private loan to them? What does that mean in terms of being an investor partner with these individuals, and what are they using your funds for?
At this point, I consider I have two partners. One is the hobby millionaire founder, and she has lots of rentals and lots of other properties. I can't imagine all the deals. She's been in it for over 20 years. But I only invest in her properties, and effectively I give her a mortgage. I get the first lien on the property, and it's all property based. It's not to the business. My second investor is very similar. His tend to be startup, buying the property, doing the rehab, and then he cashes out to a mortgage from a bank. But for the first investor, I have 30-year loans. I have the mortgage. And in addition, honestly, before I got involved in both those people, I just stumbled into the notes area. I really started more so in notes, which are beyond the property. If you don't know notes, we'll have to cover that another day. But I've purchased two mortgages on a property, one in Ohio, one in Kansas, and I hold those, and they run for about 20 years. And I just get the checks. I don't have to do anything for those. These other people, we're constantly investing. They're opening a property, starting a property, or selling a property. We're constantly moving the money around.
So would it be safe to say, Tim, that your focus with your self-directed retirement plans is more on the paper side of the business? That is, paper secured by real property, whether it's buying an existing note or you're actually making a private loan from your IRAs to an investor partner in order for them to fund their project. Did I get that correct?
Absolutely. We, again, try to flip hands-on. We're getting too old for the hands-on. We had rentals until a year ago. We didn't want to deal with them anymore, and the market was good to sell. Yes, we are definitely, it's intentional on our part to be more back-end mortgage-driven, paperwork-driven, and to do it from home. I don't want to be out there on the road. I don't want to be sending postcards and all the other aspects of real estate investing that people are promoting. I want to be as simple as can be. And yes, paper, just moving paper.
So for our audience, Tim's the bank. So when investors need financing and Tim has available capital in his IRAs, as he had mentioned, he's trying to do as many deals, if not all of his deals, through his retirement plans. He has the available capital. If it makes sense after he looks at the deal, at that point, the IRA money is sent to fund that particular project. And then all of the interest income flows back into that self-directed IRA. And of course, the accumulation of said income is growing tax deferred in the case of a traditional IRA. And for those of you that have attended some of our other training, if it accrues in a Roth IRA, that would be tax-free dollars. So great work, Tim. Let me take a couple steps back. You had mentioned, Tim, at the beginning that you started your retirement account investing through putting money in over the years and primarily investing in the traditional financial markets. What's your position now on the traditional financial markets versus real estate-based assets? Do you still have exposure to the traditional financial markets, if you don't mind me asking? Is it all in real estate? What type of portfolio balance does it look like for you?
It's not balanced. It's like 99% real estate. Moving ahead, I very much want to add a stock market, bonds, whatever aspect, 10 to 25%. Again, I don't have much faith. I think it'll crash more likely than our positions in the real estate market. Being in real estate, people need these homes, and the rentals are even more so. If the market crashes, the homeowners are moving into rentals, and we're in a strong position risk-wise. I'd also I'll spend more time also on crypto, but I'm not ready yet. In January, I will have plenty of time to read, study, look for deals, and move ahead. I started again. I may have said this. I started with all my own money, and I can't wait to find the techniques for using other people's money and bringing it in as well.
And so for our audience, I'll summarize and mention that Tim, his philosophy, his investor philosophy is nearly 100% real estate. And then Tim had mentioned a little bit about maybe eventually diversifying into also the traditional financial markets, stocks and mutual funds. And the reason why I draw this out and I add a little bit more color to this part of the conversation is it really depends on you as the investor. You get to take full control. So for you, it might mean 100% invested in real estate with the retirement plans. For other people, it might be 50-50. For other people, it might be 70-30. And obviously, that's going to change over time. And Tim, I think you're a great representation of this. And this is why I'm so glad that you're in the studio with us today, because I think it represents that there's an evolution that occurs over your lifetime. And so you're obviously at that stage in your life where you've owned rentals, you've managed rentals, you've done the physical real estate part of it. And I'm sure with that came a lot of experience, so that as you're out selecting investments to lend on, you have a lot more experience and background to select the right borrowers and the right investments that are suitable for your retirement plan. And so, folks, what I'm driving towards here is that balance can change over your lifespan. And for Tim, in this case, he's nearly 100% invested in real estate. His transition is away from physical real estate and into paper assets. And so I really emphasize that here on today's program, because it's not a one glove fits all in the self-directed IRA business. You really have to come into this creating a customized scenario, and we look at it from a customized perspective, and we work with you one-on-one so that we can make sure we provide the right education, the right tools, and the right infrastructure so that you can ultimately achieve the goals that you've set out to achieve. And with that, Tim, let me ask you another question specifically about long-term. Going into self-directing your retirement plans, what was that vision for you? From a long-term perspective, what was the why behind self-directing the IRA into paper assets and real estate?
Let's be ready for the retirement, and we have accumulated a lot, but we accumulated honestly because we pushed the money into the 401k during employment. I had a good job and I could do that. Not everyone can do that, but we accumulated over 5 years by pushing maximum amounts into 401ks and transferring rather quickly into IRAs and investments. I want to point out that, yes, younger folks and people who don't have corporate 401ks, they want to start out hands-on. They got a little bit of money, and they got time, they got skills, they got the rehab, they got a inexpensive property that they can get into, spend the time, rehab it, rent it out, take that rent, try the second one. That's an excellent way for younger people and people without other options to go. And we did. We came in by hands-on. But there are options for jumping in to the paper. When I said notes before, that's just another word for mortgages. And there's a whole market that you don't have to get hands-on property at all. You can do it. Just deal with mortgages, buy, trade. There's a term partials, which is a really big way of trading. And I don't want to go too far, but these are things I'm looking at is how many things can I do sitting here at my PC as I get older and older and can't get out there. I honestly can't hold a hammer much anymore. That's how bad it is. So I want to be looking at options for not physical as much as possible.
Which makes a lot of sense, Tim, in the IRA world, as we cannot be physically working on the properties ourselves. And so sticking to the desk work, the desk duties, which is what you're talking about, makes a ton of sense from an IRA perspective. Beyond that, Tim, one thing that I'm interested to and would like the audience to hear from you directly is, what were some of your concerns when you started a self-directed IRA? So before you even did your first investment with a self-directed IRA, what were some of the concerns and challenges that you faced?
Yeah, several fee structures. We looked around at several custodians and compared fee structures, and they vary. And my wife took the time to compare, and we went with one. And at some point, she said, "It's the wrong one for us," and we transferred everything over to you. And we've been very happy with your structure. We don't know you. We didn't know them. We didn't know any custodian. We didn't know the real estate world. I've now been in it 6 years. I've gotten to know reputations. I've gotten to network. And if I don't know someone, I know someone that can tell me, yeah, this other guy is good or bad. And that approach is good or bad. I mean, when you're green, you're green. When you're a rookie, everything. It's your life savings. Can we put it? I can't believe we bought those 2 mortgages early on. And I want to emphasize something we haven't addressed at all. How much? And I'm not going to go into specifics, but we're not millionaires. We started small. We kept working at it. And those mortgages we bought, they're $25,000, $30,000 mortgages. You can buy them at that price. I mean, that inexpensive. You don't have to come in at 100, 400, some crazy number. And that's another flexibility to being self-directed. You can come in rather small. I don't know how small, but I think a lot of people can afford it that they don't know they can afford it.
And so with some of those challenges you faced, you obviously were able to overcome those challenges. And I don't want to say with relative ease. Obviously, it took work, to your point. Beyond the return that you're making, I know that you have spoken about the community. You mentioned community before. Could you elaborate a little bit on, kind of beyond the IRA and the return, as we like to say, beyond the return on investment? What is it that drives you to do the next transaction, make the next real estate transaction, again, beyond the return on investment?
Well, for one thing, I'm coming out of corporate America, and it's been, frankly, a dog-eat-dog world. And while real estate is definitely competitive, it's very friendly, very agreeable. Be careful, approach new people carefully, but once you get in there and you're around, you see John Bowen at several conferences and other people saying, "Hey, John's a good guy." You get your network going. It astounds me how many people I could reach out to today just by attending conferences, meeting people, listening. We've met some rotten apples along the way, and you've got to take those notes and keep them handy. I don't expect anyone to give me grief here moving ahead in real estate. They may give dicker over price, but they won't be insulting as they were back in the office. So that kind of networking, everyone win-win. There's lots of people out there trying to help other people, and not always for a price. Just helpful information all over the place.
And Tim, let's transition to the actual processing of the transactions. What's your experience been like in actually executing, moving money from point A to point B? I know one of the questions we get often is, okay, I understand the concepts. I can make loans. I can buy real estate. I can get very creative. I can do, you reference partials. There's all of these things we can do with our self-directed IRA, but when it comes down to it, how do we actually do it? How do we process it? So could you share with the group a little bit about your experiences in actually conducting these real estate transactions, these private lending transactions with your IRA?
There's two sides, and the easy side is dealing with your company's web site and the way you fill it out. It's quite straightforward, and your team is outstanding. The service from your people is really, really good. I got to go before that, though, in preparing the deal, negotiating me with John, talking with people to person to person before you get to equity. That does require sitting down. I mean, I'm good with spreadsheets. You got to know your prices. You got to know how much dollars and what dates are how many dollars are going to be transferred on what date. And we have 5 IRAs. So we have to know which one's coming from, and we have to deal with percentages. We do deals. We recently had a deal where the investor bought 2 properties on one deal, one contract against 4 of our 5 IRAs. The attorney did a nice job of writing all that up. 2 being purchased, 4 IRAs funding it. And you got to have the attorneys. Don't do it one-on-one, you and the seller. Dealing with equity is the easiest part. You just got to get to the website, fill it in, and if you have questions, just call them. And if you can afford it, sign up for Gold to get the extra support. Gold level service from equity is outstanding.
And Tim, you said something there that I'm sure struck a chord with a lot of the folks in the audience today, and that is you used 4 retirement plans. Correct me if I'm wrong. 4 retirement plans on one transaction.
Yes. Well, we have 4. I have traditional Roth. My wife has traditional Roth. These are considered separate entities by the IRS, and we can partner them in deals as long as $100 coming out of my traditional earns maybe $6, and you put that $6 back into the same account. That proportion is so critical, and that's what I'm saying about your own paperwork. And I have to do that up front and tell the attorney clearly that this percentage is coming out. Well, this amount is coming out of this IRA account, and it's this percentage of that deal. And when the money all comes back, it's got to go back in at the same percentages. Those have got to be accurate. It's not that hard. It's a little tedious. Someone with experience might be called upon to help you with it. Most people aren't going to work with 3 or 4. I'll tell you real quickly why. Because I originally had a number, $50,000, and it was in my traditional. And then I started the Roth, and maybe I had 10 over there. I put it in one deal. I had $60,000 deal, and then I started earning money, and I had some extra, and my wife opened her too. So between my extra earnings and on 2 and her new money, we maybe had 35 more thousand to lend. And we took all those little pieces and we cobbled it together and made another deal. And I wouldn't highly recommend it that way, because we're at a point of some liquidation and we have to somehow close out deals so that we can get all the pieces back, all the pocket change back into one pocket. Fortunately, I just looked last night and we have several projects which are all coming due this coming year. So we can restructure, we can make the next deal out of one IRA. It's better to do it out of one. It's just cleaner. But we may have to wait for 2 or 3 deals to close so we can get the money reorganized. I want to mention one other thing. I don't know, you may ask me about it, but the point being that the IRA is a legal entity, and the level of I'm going to say protection. I'm not sure if it is. There's so many legal aspects to follow. They're not overwhelming. You just got to know them. But it goes on the books as the trust, as equity trust. It's a trust for me on the lien. Now, there are ways of people contacting me, unfortunately through equity, but it's a value. It is a trust right away for the money.
That's right. And for our audience, what Tim's referring to there is your IRA is a trust, and there's a layer of anonymity or privacy there. In fact, what you'll find is when you title your investments, whether it's a property or it's a mortgage note, the lender or the owner of the property isn't you. It's not Tim. It's Equity Trust Company, custodian, FBO is in for benefit of Tim's IRA. And for privacy, to keep your name off public record, instead of putting your name, you can use your Equity Trust account number. And then if anybody reaches out to Equity Trust, we can't give you or we can't give Tim's information because we're regulated as a financial institution that isn't permitted to divulge that sensitive information. So the good news is you have that layer of privacy. And Tim's right in that it's a separate entity. So you got your IRA is purchasing the investments, is making the transactions occur. So great points there, Tim. So last thing I'll ask you, Tim, is in closing, just are there any words of wisdom or comments that you can make to maybe some new investors out there that have never self-directed an IRA before, as they embark on this new journey of self-direction?
Number one is get started. Read up on it, maybe listen to some more videos, but get started. There's several high quality custodians, but equity is right up the top. And don't let money sit idly. Unfortunately, I have some right now that I'm very frustrated that I'm struggling to find an investment and it's been idle. There are multiple reasons for that, but it's safe. Is simply zero income. Some people might even say negative because I'm not taking advantage of the opportunity. Get started and look for opportunity. You can do it physical or paper, back end.
Outstanding. Well, I really appreciate the time today, Tim, and words of wisdom. And for all of you out there in the audience that like the idea of self-directing an IRA, there's a lot of educational resources that you can participate in. Here at Equity Trust Company, we host webinars on a consistent basis. We have also a YouTube channel you can check out. And on that YouTube channel, we have a variety of videos on a variety of different educational topics. And so I would encourage you to participate in those learning opportunities. That is something that we're very proud of here at Equity Trust, is being a custodian that provides a lot of education and a lot of information to our clients and prospective clients so that they can make an informed and educated decision. And of course, we consistently have folks like Tim in our studio to educate the masses on some real world applications of how they're utilizing their self-directed IRAs. So until the next program, everybody out there, keep leveraging compounding interest in the absence of taxation. Thank you so much.